we genuinely have to be the best in the world. Like, we are fighting tooth and nail with companies like Amazon, with Costco, with Audi. The real secret sauce of Kmart is their...
How seriously did you consider rebranding Bunnings to Hammer Bun? I'm Sonia Williams, one of the co-founders and co-CEOs at Sharesies. And today we're in a bit of a dreary Sydney, about to chat with Rob Scott, who's the CEO of Wesfarmers.
There came a point in time where it was very clear that physically I was not going to be the best in the world in sport anymore. But, you know, I wanted to be part of a team that shared a similar sense of ambition.
Wesfarmers is one of Australia's biggest companies and is the name behind the brands that we know and love, like Kmart, Bunnings and Target. We're going to learn what it's like to be at the helm of one of these big companies.
The type of culture you need to be successful in Bunnings will be a little bit different to what you need to be successful in a lithium refinery, which will be different to what you need in a healthcare business.
Before we get started, I want to pay my acknowledgements to the traditional custodians of the land where we come to you from today, the Gadigal people of the Eora Nation, and pay respects to elders past, present and emerging.
Investing involves risk. You might lose the money you start with. We recommend talking to a licensed financial advisor. We also recommend reading product disclosure documents before deciding to invest. Everything you're about to see and hear is current at the time of recording.
Welcome, Rob. Thanks heaps for joining us.
Thank you.
So, Bunnings Group, Kmart, Target, all huge brands, all owned by Wesfarmers. Can you tell us about Wesfarmers?
Sure. Well, Wesfarmers has been around for over 110 years now. So we started off life in 1914 as a farmers cooperative. And then in 1984, they made a very important step to demutualise, so converted from being a cooperative structure to a listed company. So we've been a listed company since 1984. And since then, we've continued to evolve, continued to buy and sell businesses with the very singular focus of trying to deliver a satisfactory return to our shareholders.
You talk about the diversification and maybe the starting with farmers to now having Kmart and Bunnings. Is there a thread that hangs together around these portfolio, how your portfolio grows and changes?
Our objective is to deliver a satisfactory return to shareholders. And perhaps in a very true understated farmer's style, we define satisfactory as being in the top quarter of returns for all Australian listed companies. So we do set quite an ambitious target, but we also take the view that it's only possible to deliver those superior returns if we focus on the long term. So we deliberately have a long-term investment horizon. And we also realise that in order to deliver sustainable returns, we must anticipate the needs of our customers, look after our team members, treat our suppliers fairly, take care of the environment, contribute to the communities in which we operate and act with honesty and integrity. So although we have a very financially focused objective, we realise that to do that over the long term requires us to be a very sustainable company and a good corporate citizen.
How do you go about thinking about that type of thing then, if it is really around, you know, spotting these incredible growth opportunities or working out how to grow these companies? How do you go about managing that?
Well, as I said, because we are very long-term focused, we're not one of these investors that buys and sells companies all the time. So we invest in companies that we feel that we have the ability to manage, that we feel are good quality businesses that we can invest in over time and that will ultimately generate good returns. So that long-term focus very much guides us. We also think about 4 broad strategies. And when you operate across a diverse range of industries, it's hard to say this is the one strategy that's going to work for a retail business or a chemicals business. But our 4 value-creating strategies are quite simple. They are ensuring operational excellence across all of our businesses to satisfy customer needs. Secondly, finding growth opportunities through entrepreneurial initiative. The third strategy is renewing the portfolio, and that's ensuring that our capital is allocated into businesses that will generate good returns. And then finally, responsible long-term management, so ensuring sustainability within our businesses.
Yeah, cool. Do you want to talk a bit more about how you see sustainability?
Sure. Well, as I said earlier, we see sustainability as being totally linked to delivering superior long-term investment returns. And it's very much ingrained into all aspects of our operations and strategy. In fact, before ESG and sustainability was even a thing, we were one of the first companies in Australia to launch a sustainability report that we've been publishing for well over 20 years. And we also talked about those really important aspects of engaging with communities, good corporate governance, also taking care of the environment. So we take all those things really seriously, we measure them, and if your investors were to look at our half-year, full-year results or even our strategy days, you will see at the very front of every results presentation, we actually put the proof points on our sustainability metrics. Financial results matter, but also sustainability measures matter. So we talk about what's happening with our carbon emission reductions. We talk about what's happening with our team member safety statistics. An area that we are very proud of is the developments we've made around Indigenous employment, and we are pleased to have employment parity in Australia, and then a lot of issues around ethical sourcing, community investments, other aspects of auditing our supply chain are really important.
Across these different industries, I can only imagine it's like trying to wrangle the legs of an octopus within the amount of different industries that you're in. How do you keep across all the different industries and grow these businesses?
Well, one of the secrets to Wesfarmers' success over the years, I think, has been what we call our loose-tight model of management. So the looseness is around divisional autonomy. So what we do is we give a lot of autonomy, operating autonomy, to our business leaders in each division. So, for example, the CEO of Bunnings is responsible for Bunnings operations, and Mike Schneider, CEO of Bunnings, has a really capable, world-class team in Bunnings. So I don't have to worry about the day-to-day issues in Bunnings. I just worry about, have we got the right people running the business, which we do, and then I very much focus at a group level on the capital allocation, the governance, the balance sheet, and providing the support that Bunnings and our other divisions need. So divisional autonomy is really critical. And then at a corporate office, we try to have a lean, high caliber corporate office, because that enables us to not only add more value to the divisions, but to keep our costs down and to be more nimble and agile with decision making. But we are very focused. The areas that I'd say are around the tightness are very tight and disciplined around capital allocation. So if our divisions want to make an investment or they want to enter into a long-term contract of significance, they need the approval of us at the corporate level. And we also are very strict around a lot of our corporate policies and procedures. So we want to ensure that we have really strong corporate governance and reporting across the group.
What are some of the challenges and opportunities you're facing at the moment?
Some of the challenges are that we live in a very uncertain and volatile world at the moment. We're seeing that play out internationally at the moment with the tariffs, the US tariffs, and some of the geopolitical issues that have the potential to have a very significant impact on trade-orientated countries like Australia and New Zealand. And whilst our countries might not be directly impacted by the tariffs, there are always the secondary impacts if it impacts our trading partners or impacts global supply chains. So that's one that we're looking to navigate. Some of the opportunities, I'd say, would be we have a lot of opportunities for growth within our businesses. So we're really excited about the opportunities to expand our range and addressable market in Bunnings, in Kmart. We're excited about the international growth opportunities for our Anko Kmart product internationally. We have some new and emerging businesses such as our healthcare business and our lithium business that we've invested a lot of capital in, but we're expecting them to deliver good earnings growth in the years ahead. So they are some of the exciting opportunities across the group.
Yeah, so let's chat about tariffs for a little bit. How has that impacted you? Or you mentioned that you're navigating it. Has it changed things with suppliers, or tell us a bit about that.
Well, there hasn't been any immediate changes because it's obviously still quite early days and there's been a lot of change. So I think everyone's still trying to understand where are the final tariff situations going to land. At a time when there was the talk of over 100% tariffs on China from the US, that could have had very profound implications on global trade. And like I said, although it wouldn't necessarily have a direct impact on Australia or New Zealand, if a lot of our major suppliers and trading partners were being impacted in Asia, then it would have impacts on us. So what we're really doing is continuing to monitor the situation. We have over 1,000 people in Wesfarmers based across Asia, in various countries in Asia, in various sourcing, supply chain, buying and technology roles. So we have deep connectivity across different countries. We have a very diversified supply base across many countries. So our focus is just to be ready to move. If there are changes, we want to be able to work with our key suppliers. If there are opportunities to get better rates and better terms for the benefit of our customers, we will do that. And we're one of the largest users of container shipping in the Southern Hemisphere. So if there were changes in container shipping internationally, then we have the ability through our strategic partnerships to ensure that we retain supply at a good price.
Over the years, Kmart's gone through a bit of a repositioning, and it's actually it's now known as a really cool place to shop. Can you talk about how that strategy has been playing out over the last few years?
The Kmart team have done an amazing job of transforming that business, and the real secret sauce of Kmart is their product development capabilities. And because we design and we source products directly at scale, we're able to do so, number one, in a very sustainable way because we control the supply chain. But we're also to bring very unique products to market at unbelievable price points. And the great thing about that is making on-trend, exciting products more accessible to the community. And we've seen that across many categories, not just apparel or home or kitchenware, also a lot of our own brand toys, tech accessories, more recently health and beauty products or exercise equipment or pet accessories. And now 85% of the products we sell in Kmart are our own very unique and exclusive products. So that's really resonating. And I guess the public is now starting to see that they can expect a lot of innovation in product design. They can expect the best prices. And it's a really exciting place to shop.
You've got the global stores like IKEA in New Zealand, you've got Warehouse Group. How do you compete?
The retail market is just so incredibly competitive, and what good looks like today is just not going to be good enough in 5 years' time. Customers have the choice now to buy many of those brands online. They can sit on their phone to find the lowest price for that brand and get it delivered to their door, their front door. So to be competitive and relevant for today's consumers in retail, you need to have a point of difference. And as I said earlier, Kmart's point of difference is their unique products, on-trend, unique, everyday products at amazing prices.
Yeah, and so one of the other environmental things going on at the moment is the cost of living crisis. How is that affecting the Kmart brand or Kmart's performance?
I must admit, we would much rather households had a lot of money to spend. We don't like cost of living crises, right? But when customers are doing it tough, when households are really trying to manage their budgets tightly, we are very confident that businesses like Kmart, Bunnings and indeed Officeworks are really going to help families with their cost of living pressures. So we have a philosophy in our businesses. It's called an everyday low price philosophy. And that is that rather than confusing customers with high-low pricing, so the price is high one day and discounted the next, that leads to a lot of mistrust in pricing. We try and have an everyday low price. If we are able to drive efficiencies or cost savings through our growth or sourcing abilities, then we want to share some of that benefit in lower prices. And if you remember post-COVID, remember when inflation started to kick in, and the secret is that many retailers like inflation because inflation lets them put up their prices and fractionalise their costs. Now, we made a very unpopular comment for investors coming out of COVID when inflation started to kick in and many investors thought, wow, this is a great thing for retailers. Well, our businesses and we as Wesfarmers came out and said, no, we are going to keep our prices low. We are going to do everything possible to avoid putting our prices up too much. But that has served us really well. It's also helped customers in their time of need, and it's a very core philosophy of our retail businesses.
So the Anko brand, you touched a little bit about that, but I'd love to hear more about it, especially the global expansion or how you're expanding that.
When you look at the Anko products in a particular range, the way that the range is curated, the style, the colours, the themes of the range is very attractive for many other international retailers. And there are many international retailers that are looking to simplify their businesses. They might not have the ability to have very extensive sourcing and design capabilities. They might not be able to invest in the same level of factory auditing and sustainability oversight that we do. So we started to learn that there was a fair bit of international interest. So we did set up a separate team, and we're now pursuing 3 strategies for international growth. The first is we're opening some new Anko stores in the Philippines, and we're doing so in partnership with a big Philippines group called Ayala that own a lot of shopping malls there. So by the end of the year, we'll have 5 or 6 stores open, Anko stores as they're called, and so far they're going really well. We also have wholesaling arrangements where groups like Walmart, Walmart Canada, we have some European retailers, Carrefour as an example, and a few others, where we're selling product to them for them to use in their international stores. The final area is a white labelling opportunity. So Mattel, the international toy company, currently rely on Anko to provide them with their wooden toys that they white label under the Fisher-Price brand. So if you're in the US and you're buying a Fisher-Price wooden toy, that's coming from Anko.
Yeah, well, I think I've got one of those little wooden coffee machines at my house.
Fantastic.
They are great. A recent Ray Morgan poll showed that both Bunnings and Kmart were in the top 3 of Australians' most trusted brands, with Bunnings taking out the #1 spot. What do you think drives that trust?
Look, it really starts with our teams. We have leaders that are deep leaders and team members in those businesses that are deeply committed to delivering on their objective of everyday low prices, doing the right thing by their team members, their customers, and the communities in which they operate. And I think that trust that customers and households can have in our products really matters. And then I think there's a lot of the other stuff over and above that, a lot of the contribution that Bunnings and Kmart make to the community. Like across the broader Wesfarmers group, just in the last half, in 6 months, we made contributions of, I think it was $55 million of direct and indirect contributions to over 8,000 community organisations in Australia and New Zealand. And that is happening while we do a bit at Wesfarmers corporately. Most of that is happening on the ground in local communities with businesses like Bunnings and Kmart. So all of those things really matter. And I think I'd like to think that our divisions feel that having a supportive owner like Wesfarmers that is very focused on the long term and will make capital available to invest for the long term, it really gives them the ability to make the types of decisions that are going to pay back over the long term. Coming back to
the return that you talked about, you've done the half-year results recently. Do you want to touch on a few of the headlines around the recent announcements?
Sure. Well, look, in some ways it was a fairly challenging 6-month period because economically, both in Australia and New Zealand, consumers households in both countries were doing it pretty tough. They were facing higher interest rates, cost of living pressures. So we were having to navigate that. So our businesses were having to work really hard to find new and different ways to grow. And I think what helped us is because we continue to expand our offer and expand our range and grow our businesses, that certainly helps. So we were pleased to get a few % revenue growth across the group. And importantly, we were able to do that without putting our prices up too much. So essentially our prices went up less than inflation. So I think that's really important to note. We were also able to slightly grow our earnings. We were able to generate really good cash generation as well. And our return on equity is very strong. So at a group level, our return on equity is about 30%. So they were all the key measures. The other very important measure for our shareholders was that we were able to increase our interim dividend. And in the current environment, there's not many companies that increasing their dividends, so that was received really well.
You talked about it before around that it's not just the financial metrics that are important that you follow. You talked about sustainability. Are there any others that you want to that you track or keep an eye on?
So some of the measures that probably a lot of investors wouldn't follow, that we follow closely, we really look at our team member engagement scores. So we every year, and sometimes more frequently, we do pulse checks within our team. And I think team member engagement gives you a sense of the cultural health of a business. Secondly, we look at things like unplanned absenteeism. So, some might say, how often are people taking sickies? There is a very strong correlation between companies that are struggling culturally or performance-wise and, the desire of people to take more time off. Now, sometimes people get sick, but if you sometimes see unplanned absenteeism tick up, that's a sign that something's not quite right. The other really important metric that we focus on very closely is team member safety. And we measure what we call TRIFR, which is recordable safety incidents. We also monitor any safety incidents that require our teams to take time off that are more severe. And we also monitor near misses. So these are some of the measures that you'll find most professional good companies do focus on. They don't necessarily show up directly in the P&L, but they're really important measures.
So how would you describe the culture at Wesfarmers?
Every one of our businesses has their own unique culture, and we encourage that, because the type of culture you need to be successful in Bunnings will be a little bit different to what you need to be successful in a lithium refinery, which will be different to what you need in a healthcare business. But first of all, there are 4 values that we expect. First of all, the value of accountability is really important. Also, integrity is fundamental. Openness is something that's a little bit unique, I think, to the Wesfarmers culture. The value of openness, which does go to our ways of working, is that we say bad news should flow faster than good news. We're really an organisation that doesn't like people trying to manage upwards, like only sharing the good news. And openness is also being very open with ourselves and each other on what we can do better. What can we do better to improve? Because as I said earlier, what good looks like today will not be good enough in 5 years' time. So I need to make sure that I'm individually getting better, our team needs to be getting better, and our businesses need to be getting better. So that sense of aspiration and openness, together with, I guess, a degree of humility, I think is a really important part of our culture.
The Bunnings Group is dominating Australia and New Zealand hardware sector and is considered a gem. How are the results going for Bunnings, and how much does that make up of the Wesfarmers portfolio?
Well, Bunnings is our largest business by both sales and by profit, so it's very important. Bunnings represents over 50% of our earnings, and there's still good growth prospects there. I know that Kmart has been growing their sales and profit arguably at a faster rate than Bunnings, so he's catching up a bit, but Bunnings still has a good lead. How
did you have to adapt the business to compete in New Zealand?
I think there are some things that are the same. Number one, Bunnings' commitment to lowest prices, Bunnings' commitment to delivering better outcomes for their team in terms of higher wages, a really positive culture, the deep engagement that Bunnings has with community in New Zealand. All of those things are the same. Interestingly, if you compare the New Zealand market to the Australian market, in Bunnings we would have a higher proportion of trades, like trades relative to DIY is a little bit larger. That would be one difference. We want to make sure as well that our offer in New Zealand really works for the different communities. And as is the case in Australia, a Bunnings store that you might find in inner city Sydney is fundamentally different to a store you might find in rural New South Wales. So the same applies for Bunnings. So the stores you'll see, the warehouses you'll see in Auckland are quite different to the ones that you'll see in other regional areas. But what you can rely on is that same consistency about everyday low pricing, hopefully really great service from our team members, and good engagement with community.
How seriously did you consider rebranding Bunnings to Hammer Barn?
Well, I think there's a generation of future shoppers that probably would resonate. The Hammer Barn would resonate a lot more strongly than the Bunnings brand. But look, the Bunnings brand has been around even longer than the Wesfarmers brand, so it would be a pretty big move to change that.
I've got a 2.5-year-old who just watched Bluey the whole way over here. Can you tell us a bit more about that campaign and how that came about?
When I heard that Bunnings were going to do this, I had to ask the question of who Bluey was.
Way.
Because my kids are now growing up and have left home. They're at university, so yeah, for me it was the Wiggles and all of that when my kids were growing up. But anyway, it came about as a result of the Bunnings team thinking creatively how to not only market the brand and promote what they do, but also to be really deeply engaged with the community. And Bunnings over the years, they run a lot of sessions for kids, and that was really popular. So this was in many ways a really logical next step. So it was fantastic to see the success of it. The Bunnings team did a great job. And as I said, hopefully it brings a new generation of shoppers into Bunnings.
You talked about that you don't think Wesfarmers will look the same in 5 years. So talk a bit about the future.
Look, the first thing with industry trends, we have made some pretty big bets. We've allocated a lot of capital to the healthcare sector and to lithium. Both are areas where there are some pretty strong tailwinds around demand. So in the next month and a half, we'll be hopefully producing our first product, which is a lithium hydroxide product in Kwinana in Western Australia through our Chemicals, Energy and Fertilisers division. And that will be a world-class lithium hydroxide refinery operating on very sustainable standards. And that will be able to service the international market for electric vehicles over the next decade. So that is one of those examples. And it's interesting, we used to own coal mines, but we realised that although we generated good returns, that wasn't necessarily going to be the future for Wesfarmers. So we sold our coal mine and invested in lithium. So that's one of those new trends that we're hoping to tap into. The other one with healthcare is we own a chain of pharmacies and we partner with the pharmacist franchisees within that network. We also own the largest telehealth business in Australia called Instant Scripts. We own a med-aesthetic skincare business called Silk. And we also run a very large pharmaceutical wholesale business that is able to get any prescriptions, pharmaceuticals you need to every pharmacy in the country within 24 hours. So what excites us about this is that healthcare costs and demands are increasing, especially with the ageing of the population. And we believe that community pharmacists can play a really important role in community health. We also believe in the future of telehealth. We do work with, obviously, licensed GPs that support our telehealth business. So our vision is to try and make healthcare more accessible and more affordable through our network. So that's the opportunity. So they're two big trends that we're hoping to tap into. We currently have a number of live use cases using generative AI to improve customer service, so through chatbots, but also importantly conversational commerce, which could transform search as we know it at the moment. Also team member tools, so Bunnings and Officeworks have voice-enabled generative AI tools to give technical information on products that can help them service customers. And then a lot of other productivity tools just to help our teams do their work. So it's an area that I'm really excited about. We're not going to go out and invest in large language models or build our own software, but we can be a really sophisticated user of these technologies for the betterment of our customers and our shareholders.
Let's chat about you. You're a dual Olympian, a silver medalist, investment banker, and now CEO of one of Australia's largest companies. What's your secret to thriving under these pressure cooker environments?
The first thing you learn very quickly as a CEO is really it's not about you, it's about everyone else around you, right? So I think it's ensuring that you have phenomenal people working with you. And I don't mean good people, I mean phenomenal people. And you come back to where we started, which is we want to deliver a top quartile total shareholder return. We want to be in the best 25% of companies over the long term. And if you have great people, then they're going to be very capable of making the right decisions. So as a leader, you just need to create the settings, the culture, the environment, and the support for them to ultimately get on and make the right decisions.
Is there any lessons that you've brought over from sporting into business?
When you're training with a group of people, that every day you get up and you're trying to be the best in the world, and every single thing you do, from what you eat for breakfast and your training session to the stretching and the recovery and the planning, all of that is about being the best in the world. There came a point in time where it was very clear that physically I was not going to be the best in the world in sport anymore, but I wanted to be part of a team that shared a similar sense of ambition, and that's what I love about Wesfarmers. And for a business like Bunnings to be successful, or Kmart to be successful, we genuinely have to be the best in the world. Like, we are fighting tooth and nail with companies like Amazon, with Costco, with Audi, that are really large international companies, best in their class. So, that sense of trying to be the best in the world, I think translates really well from sport to business.
You've got almost 500,000 shareholders. What's one thing you'd love for them to take away from this conversation?
Hopefully they can get some comfort from the fact that I'm also a significant shareholder in Wesfarmers, so our interests are very much aligned. I'm only the 8th CEO in Wesfarmers over 111 or 12 years, and I know, as my predecessors have, that our job as CEOs is to make sure that we're delivering on that top quartile total shareholder return over time. So the message to our shareholders is that I am very focused on delivering on that. I'm also very focused on delivering on that in the right way, right? We're not a business that makes compromises ethically or morally just to try and improve short-term performance. Sometimes shareholders have been shareholders for many years, going back to the IPO, and that those shareholders that may have taken $1,000 of shares in the IPO and reinvested their dividends, that's now worth over $1 million. And those shares have helped them, send their kids to school. It's set them up for their retirement. That makes us really, really happy to hear those stories.
So before we wrap, do you have a favourite quote or piece of advice that you've picked up along the way?
One of my favourite quotes is, when the horse is dead, get off. Right? And I think that actually has a lot of relevance in investing. So for your investors out there, sometimes you need to know when to get out, right? Hopefully that won't be the case with Wesfarmers, right? But look, if there is a quote that I think is very inspiring and relevant, it's that old Roosevelt quote, "The critic." It just talks about how easy it is to be the critic. But really what matters in life is the person in the arena that's trying, they're failing, they're getting up, they're having another go. And in history, in life, in business, in sport, it is those people that ultimately create value, create change, do special things. And I'd like to think that, in the Wesfarmers Group, we have far more people in the arena having a go than we do critics sitting on the sideline commenting on things.
Well, thanks heaps for joining us, Rob.
Thank you very much. It's a pleasure.